Welcome to the Friday edition of Tech Stocks Daily, your go-to source for the hottest tech buzz. Today we're diving into Netflix's groundbreaking foray into live sports with their Jake Paul and Mike Tyson boxing event, which attracted a jaw-dropping Super Bowl-sized crowd. But hang on, there were streaming hiccups you won't want to miss hearing about. We'll also unravel Five9's roller coaster ride of legal drama coupled with snazzy innovations that have investors grooving. Then, marvel at Marqeta's courtroom drama following a steep stock plummet. Finally, we'll swing by Apple as it shifts AirPods production to India and eyes future global dominance. Buckle up, tech fans. This episode packs a punch. Folks, grab your popcorn because Netflix has been all over the news today, and we've got an action-packed story for you. The streaming giant, synonymous with binge-watching, is now trying its punchy hands on live sports events. Buckle up, because we're diving into the gloved-up action of Netflix's live boxing event featuring Jake Paul and Mike Tyson. Here's what went down. This wasn't just any casual match. It saw an unbelievable 109 million viewers worldwide seeking to catch a glimpse of this boxing barn burner. To put this into perspective, Netflix basically summoned a Super Bowl-sized crowd, turning our screens into a digital coliseum. Amidst all the uppercuts and hooks, Netflix's stream experienced serious buffering issues as the modern-day gladiators fought it out in the ring. The demand was so massive that it pushed every internet service provider's limits across the globe. Picture the internet struggling dramatically, like it was running out of breath on a treadmill from 1999. This match brought chaos and excitement, similar to Thanksgiving dinners, according to Netflix's co-CEO Ted Sarandos. In his words, it was really phenomenal, unprecedented even. The boxing endeavor revealed Netflix's hidden talent for organizing grand live events akin to a digital sporting maestro. Sarandos was practically buzzing when he revealed the company's Silicon Valley control room was on high alert, trying to work its magic wand on the web to fix all those streaming stumbles. Despite the hiccups, and just like Rocky, Netflix is already eyeing the next round. On Christmas Day, the company looks set to launch another live sporting spectacle, this time with 2 National Football League games. Taking center stage will be the powerhouse performance by none other than Beyoncé during the halftime show. Sarandos promises these productions will be packed with all the unique razzmatazz and spirit of the holiday season, which he believes could make them even bigger than the games themselves. Netflix is now shaping up to corner the live event market, betting heavily on its ability to draw audiences and advertisers alike. It's not just about gaining subscribers anymore, it's about diversifying and tapping into lucrative ad revenue streams. Sarandos did admit, though, that the company hadn't quite harnessed the full potential of commercial bucks with the Paul Tyson match. But wait, there's more. Next in the lineup, are Netflix's impending broadcasts of WWE events in January, a nod to the appeal of a younger audience and enjoyable storytelling of the wrestling world. All in all, it's a calculated gamble to woo more eyeballs and your wallet toward Netflix's versatile content curation. Stay tuned because Netflix is coming for your heart, not only with superb narratives, but now also with pulse-racing, live sports extravaganzas. Who knew your next Netflix and chill could include cheering and sporting popcorn? This is Netflix's game now, folks. It's a big day in the world of tech as Five9 finds itself in the spotlight, and for a variety of reasons. First up, some legal drama. Renowned law firm Braunstein, Gewirtz & Grossman LLC has announced a class action lawsuit against Five9 Inc., which could be quite the game changer. Apparently, there's a bit of a kerfuffle over some potentially misleading statements Five9's been accused of making between June 4th and August 8th, 2024, especially concerning their new business strength and customer retention rates. According to the allegations, the company might not have been as resilient to economic pressures as it had led us all to believe. And now investors who've lost out might have a chance to lead the charge in this lawsuit. Popcorn, anyone? But it's not all courtroom drama and suspense in Five9's world. The company is simultaneously basking in a much brighter limelight due to its recent innovations. Five9 has made waves with a super cool feature for all the Microsoft Teams fans out there, unveiling the industry's first pre-built bidirectional presence capability. Now, whether you're a contact center agent or a back-office superstar, it's easy breezy to see each other's availability. Talk about communication goals. This fancy move, sparking a 50.9% rise in Five9's shares over the past 3 months, is setting a new industry standard and is a testament to investors' confidence in Five9's innovative portfolio. Investors are practically busting out their celebratory dance moves. Five9 isn't stopping there either. It's rocking the AI scene. With ventures like the Five9 Genius AI Suite and the introduction of next-gen AI agents, they're revolutionizing how contact centers operate. Imagine voice and chatbots that mix AI brilliance with human-like conversation skills. Sounds futuristic, right? They've even rolled out Gen AI Studio, going all out in customizing generative AI models so businesses can tailor solutions to their every whim. Now that's customization on steroids. The company is also beefing up its alliances and partnerships, like the one budding with ServiceNow, to craft AI-powered solutions. Merging the best of ServiceNow's customer service management with Five9's own platform, Five9 is all about boosting productivity and keeping those customer service highs going. Not to mention their ongoing partnership with Salesforce, with a little Einstein magic sprinkled in. Five9 really seems to be collecting friendships like a Pokemon master. Business forecasts for Five9 are looking peachy, with promising revenue growth projections into 2024, and analyst projections are quite optimistic. If Five9 keeps up its product magic and partnership potions, its future looks rather bright. This mix of legal drama and tech innovations makes them a major talker on NASDAQ today. Whether you're an investor licking your wounds or riding high on innovations, Five9 is certainly one to watch. Today's tech news spotlight falls on Marqeta, Inc., which has found itself embroiled in multiple class action lawsuits resulting from a significant stock price tumble. Let's break it down. Investors might want to grab a stress ball here because the rock star of digital payment solutions, Marqeta, had a bit of a meltdown. Two law firms, Robbins LLP and Kirby McInerney LLP, have springboarded into action on behalf of disillusioned shareholders, each announcing separate class action suits against the fintech company. The hubbub centers on Marqeta's alleged failure to give shareholders a heads up about troublesome regulatory challenges that stood to dampen their parade. To give you a timeline that's juicier than a freshly squeezed data chart, here's what transpired. During earnings announcements on November 4th, 2024, Marqeta revised its fourth quarter forecasts, attributing multiple factors including increased scrutiny of the banking ecosystem and customer program modifications as the spanner in their works. Investors were promised net revenue growth would shrink from the anticipated 16 to 18% to a considerably less dazzling 10 to 12%. Gross profits also downsized their glow-up prospects by about 8 to 10 percentage points from initial expectations. Now, you'd think things couldn't get any murkier, but alas, it gets worse. Marqeta's stock price received quite the 1-2 punch. It plummeted 42.5%. That's right, from a solid 5.95 cents per share down to a humbling 3.42. Talk about a stock market soap opera cliffhanger. The backbone of these lawsuits isn't just a revenue guidance cut. It's the juicy claim that Marqeta's higher-ups allegedly knew about this turbulent regulatory terrain much sooner and decided to keep it mum. Shareholders aren't thrilled with what they see as driving blindfolded with no GPS through some treacherous financial terrains. Both the flame-throwing law firms advocate for investors to keep their ears perked for opportunities to recoup losses or serve as lead plaintiffs to pilot these courtroom showdowns. For those fretting on who has their backs, Robbins LLP delivers a track record of wrestling for shareholder Mijorv initiatives, wise-up practices, and reel-in C-suite disciplining if they are astray. Meanwhile, Kirby McInerney LLP doesn't twiddle its thumbs either. They've been exploding on the legal scene with staggering recoveries in securities litigations over the years. If you're a stakeholder who feels like Marqeta might have thrown some shade, or at least some shadow, on your financial sun, pay attention. These lawsuits emphasize vigilance and transparency in investor relations, particularly when those regulatory goblins creep out of their hiding spots. And remember, Banksy might have the art scene, but Marqeta's got the courtroom drama covered this week. Keep your portfolios diverse, your sights clear, and your favorite business analyst on speed dial. Hey tech enthusiasts, we've got Apple buzzing in the news for a couple of really intriguing reasons today. Let's dive in. First up, we're looking at the classic rivalry. It's Apple versus the rest of the tech hardware gang. It turns out that Apple's stock situation is quite the mixed bag. The analysis done by Benzinga breaks down Apple along its financial metrics and key industry metrics, painting quite the picture. So here's the lowdown. Apple's trading as snug as a cat in a sunbeam, with a price-to-earnings ratio that sits slightly below the industry average, suggesting it's potentially undervalued. While Apple's revenue growth is currently experiencing a bit of a snooze fest compared to its peers, its return on equity is dancing circles around the industry average. Not to mention, Apple is boasting juicy profitability metrics with an EBITDA that's sky high. But wait, there's more. Those juicy stats come with caution, as the company's price-to-book and price-to-sales metrics hint that people see its assets and sales in a flattering light. Jumping over to the actual boots-on-the-ground news, Apple's shaking things up in the manufacturing world. Yup, AirPods are catching a flight to India. The shift of AirPods production to the Indian shores is another step in Apple's global shuffle of its manufacturing footprint. Starting in early 2025, Foxconn is revving up its motors in Hyderabad, with Apple already testing the assembly lines. This move is part of Apple's grand scheme to spread its manufacturing roots beyond China, with India stretching out a welcoming hand with government subsidies that are too good to resist. And while it's blazing some trails in India, Apple's retail ambitions in the country are equally delightful. With successful retail outlets bustling with customers in Delhi and Mumbai, new stores are on the horizon in Bengaluru, Pune, and more. Exports? Oh yes, they're on the upswing too, with iPhone exports hitting a sweet $6 billion mark. Apple clearly didn't just dip its toes in the Indian tech scene. It looks like it cannonballed right in. So, what do you tech fans think? Is Apple cruising at a smooth pace towards global domination, or are there storm clouds ahead? Do you think its pricing metrics are setting the stage for a spectacular rise, or is this a case of fashion over substance? And how do you feel about Apple's strategic pivot to India for AirPods production? Drop me your insights in the comments below. Let's get chatting. I'm all ears, or should I say AirPods, and eager to hear what you've got to say. All right, tech aficionados, let's put the spotlight on Netflix, shall we? With today's electrifying escapades of venturing into live boxing events starring Jake Paul and Mike Tyson, we've seen Netflix pull a massive crowd, comparable to the Super Bowl. Can you say ghoul? Oh wait, wrong sport, but you catch my drift. Netflix undoubtedly had us all in a frenzied swirl with those major buffering hiccups today. While it managed to grab an extraordinary number of eyes, the streaming struggle may be a cause for some pause. Still, their confidence in launching even more live events, including a dose of NFL action and a Beyoncé halftime extravaganza, is a bold play to conquer the live event market. We're talking surely destined to make your great Aunt Carol know something other than the crown big. Now, what does this mean for investors? On the buy, sell, hold spectrum, I'd lean towards a hold. This theatrical foray into live sports offers a glimpse of how Netflix intends to expand its revenue streams beyond traditional subscriptions. With the prospect of nabbing a piece of that sweet advertising pie, especially if they get the commercial execution right in future events, it could be primed for disciplined growth. However, we can't ignore those technical foibles and the teething problems of these bold steps. Netflix is stepping out from its tried and tested binge formats to play in the unpredictable arena of live sports. Investors would be smart to keep an eye on how their tech infrastructure and advertisers react in time for their next act, notably Beyoncé's holiday appearance heydays. So why hold in this time-shadowed whoopee fest? The potential soaring revenues from such diversification create positive speculation. But it's equally laced with operational risk that could unsettle the current stock euphoria. Netflix is showing tremendous bravery, adapting its strategy to meet differing consumer patterns, but only time will reveal if it proves prosperous. In the end, it's crucial to remember, always do your own spade work before making financial decisions. Dig through some company fundamentals and consider your risk tolerance and investment goals. You know, the wise old adage, diversify your portfolio, techies. Let me know what you do with Netflix. Maybe you're going full Rocky and betting on their round 2 resilience? Or perhaps you're hanging tight like me. Leave your sizzling thoughts down in the comments. Today's tech market was buzzing with action, and we've had our fair share of drama, innovation, and strategic shifts. Netflix took center stage with its electrifying foray into live sports, drawing a crowd that rivaled a Super Bowl despite buffering woes, all while setting sights on more holiday spectacles. Meanwhile, Five9 danced through legal hurdles with some enviable innovation accolades, boosting investor confidence. Marqeta, however, wasn't as lucky, finding itself amidst legal turmoil due to unflattering revelations and a daunting stock drop. On the lighter side, Apple's analytics painted their stock in both flattering and cautious hues, while its bold shift to Indian shores for manufacturing further stirred global dynamics. So if this tech thrill ride tickled your fancy, don't forget to like, subscribe, and share the video with everyone you know. We've got even more tech goodness lined up for Monday, and you won't want to miss it. Have an awesome weekend, everyone.